Hey guys, what's up? It's Ace coming to you January 26th, 4:37 p.m. Pacific Standard Time with today's market analysis. We had the Fed speaking today. It was a very interesting day. We literally started off with not a whole lot going on. This is the E-mini S&P 500 futures that I'm looking at right now. Where my cursor's hovered over was today's opening. What we did was we moved up a little bit, came back down, and then literally we just went sideways for quite a while waiting for the Fed to speak, which is pretty standard when we're waiting to hear information and news in the market. On this candle here, we had this huge move up on Fed announcement. I was able to scalp to the upside on this entire wick. I got about 2 or 3 trades off on scalps and did very well. Super happy about that, and I was hoping that we would have seen a continued move, but of course as the information kept coming out, we saw this massive retracement. The next candle tried to push up, but then after that we just literally sold off for the rest of the session and then went into a little bit of consolidation right before the close. The calls that I had last night did very well. I did a video on that right before this one. If you guys want to check that out, it's only like a 3-minute video, but it just explains that overnight calls that I purchased yesterday, and I spoke about them in my market analysis video yesterday, did very well. We did 30.95% on that overnight, so that was huge. Between that and the intraday scalping, today was one of the best days I've had in all of January. Unfortunately, I would love to see things go to the upside because once again, I'm all about everybody winning. And when the markets go down, only the people who trade intraday and know how to write short or sell short, can make money, and the rest of the world does not. So with that being said, I'm not really going to go over what the Fed said today. If you guys want to know what they said, you can look that up online. I want to keep this video pretty short. I'm just going to hop right into kind of what I'm seeing on price action right now. Today, we did finish down from all-time highs at 9.34%. That's where we are today. So we're just hanging out right above correction territory at 10%. And I'm going to go ahead and just hide some of these drawings so it'll make my chart a little bit cleaner for y'all to take a look at what we are seeing here. Bear with me 1 second. Okay, great. So now, yesterday I spoke about this candle pattern sequence. We have these 7 down candles, and then we had down candle number 8 here. We had the D mark indicator fire off on today's candle. Once again, long wick on today's candle because we were looking like we were going to move up after the Fed announcement, and then we just literally sold off and into the close. So, we did finish just a little bit, I believe a little bit down if I'm not mistaken. Let's just take a quick peek here. Yeah, the SPX finished just a little bit down on the session today, 6.54. Nasdaq was up slightly, 23.64, and the Dow down at 129. So what does this mean for us right now? Guys, we are smack dab right in the middle of this demand zone again. We got bought up here, we got bought up here, and then of course this is a very bearish wick, obviously because we sold off after the FOMC spoke, and now we are literally back into this demand zone. So, I still see momentum waning, trying to go to the upside here. We did have some volume coming in. It looked like it was bullish volume trying to buy. And then, of course, we did get that retracement. So we do have 3 ATRs sitting here right below this demand zone, and then 4 ATRs here into the next demand zone right beneath it. Right now, I think it's just going to be a wait and see. It's really hard to know what tomorrow's going to bring after today's announcement and the price action that we saw today. I am still slightly confident in this demand zone, but the problem is that we've been bought up twice in this demand zone, and I don't know if we'll get bought up again. Usually when we get bought up 2 or 3 times in demand, the demand zone usually crumbles. We'll have to see what tomorrow brings, but I'm just in a wait and see pattern right now. I'm not holding any long positions. My 401k is in bonds. My IRA is still in an aggressive stock position. If we do break and go into correction territory on the S&P, I'll probably move my IRA into bonds, or a combination of just maybe 20% stocks, 80% bonds. That's good for my risk tolerance. Obviously, y'all got to do what's good for you. Make sure before you do any kind of trading, you seek the advice of a financial advisor. That's very important. Make sure you're you're talking to a licensed financial representative before doing anything with your accounts. But that's what I'm doing with my accounts, and I think that's a good call for me. So let's go ahead and take a look real quick at Nasdaq. Nasdaq, we finished off 14.58% from all-time highs. Very similar candle patterns as we saw on the S&P, and we are sitting smack right in the middle of this demand zone. Once again, we'll have to see what tomorrow brings. We do have momentum trying to wane here a little bit, I really do hope we get a chance to see some positive movement, but we'll have to see what happens there. Real quick, just to hop into some other markets. Gold has been very interesting. We've been talking about gold a little bit. And right here, as I said, gold was looking like it was getting bullish on these 2 days, and it moved right up. And what happened, it moved into this supply zone, and literally the sell orders got triggered, and it pushed gold right back down today to the tune of 22.8. 22 points, 22.8 points, I guess you could say. We do have a little bit of buying that looks like it's coming in here with this wick. However, though, we do have the TMO rolling, and we have momentum going negative. We have some selling pressure here. So once again, I think I'm spot on right on my call on gold. I think we're going to see a lot of chopping around on gold. I think the only way we see gold really, rallying super high from here, trying to get through the supply, is if the market starts tanking pretty bad. But I think as long as the market's doing a little bit of chopping or a little bit indecision, which it seems to be doing over the last few days, 2 days looking like it wants to go up, today obviously looking like it's going to go down, I think we're going to see a lot of chop on gold as well. All right, let's take a quick peek over at oil, as we've been talking about oil, and my call on oil was 100% correct. And if you guys watch my market analysis videos over the last few days, I said this candle here was very bullish. We had these wicks. I said we had some buying that was coming in on this candle here, which was yesterday's candle, and we had buying also on this original hammer candle I was looking at. I did think we might get a little bit of choppiness because we tried to roll over here, but then we had some buying coming in here, and these 3 wicks really gave me conviction that buyers were coming in along with the volume on yesterday's candle. And I even said on yesterday's video, I said I think we're just going to break right out of this supply zone, and we're going to float on up possibly to $90 a barrel. So far, what I've been predicting is coming true. We do have a ton of supply up here, and I think oil's going to have a very hard time breaking through all this overhead supply. I do believe there are some institutional sell orders hanging out up here. Since this old supply zone now, or I should say, since the supply zone has been violated, we are going to get rid of it and just get ourselves a little bit better look at price action. But right now, oil's looking like it's going to hit at least 90, and then we'll see where we go from there when we smack our head into that upper head supply area. Okay. The bonds rolled over today, and I believe the bonds were rolling over because, like I said, we had this bull gap trap that happened, which engulfed this entire doji candle, and then we continued the bleeding both yesterday and today, and bonds coming down. I thought this was a really good sign that the markets were going to rally today, providing the Fed was positive. However, though, the market obviously didn't like too much of what the Fed had to say, and it did retrace into the close of the session. We'll see what tomorrow brings, but bonds were, I believe, doing some selling off because it looked like before the Fed spoke that we might get a rally. Obviously, we did get a rally overnight, and we gapped up today. So going into the VIX, this made things interesting on the VIX because, as I said, we had this blow-off candle, and then right after the blow-off candle, we had the yesterday's candle that came down on went up on the VIX just slightly, 4.28%. But what I liked about it was these 2 upper wicks, and I thought we would see a rollover today, especially when we had that gap up and a very, very good morning session. I thought, gosh, if the Fed says the right things, we could easily see fear coming down in the market. However, though, fear went back up a little bit because of the Fed and what was said and how the market digested that news. So, I think we're pretty flat considering that, we closed out here at 31.17 and we closed out on this candle at 31.95. So I'm considering this a little bit of a wash. We'll have to see what tomorrow brings, but by no means is fear subsided enough into the market for me to feel comfortable getting or even thinking about getting long on anything. So I'm still on a wait and see as far as that goes, but definitely keeping my eye on the VIX. And then real quick, this was not good for the market. The dollar rallied and actually broke through this trend line here and is now making its way up to this horizontal resistance point. As you guys know, strong dollar equals weak market and vice versa. So I was really hoping here, where we were really flat on the day for the most part, I was hoping we would have seen a little bit of a rollover, but unfortunately we did get a pop up on the dollar today, and we'll see how that weighs on the market here over the next few trading days. And then real quick on crypto, guys, crypto is looking like it has been since it broke through that old demand zone that was here. And we did go ahead and find support in this demand zone. And just like I said in my last couple of videos, it's really, crypto's chopping. It's just chopping, and it's very flat, and it's not a whole lot going on here. I think before we see crypto go up, we'll probably see another retracement back into this demand zone where there was institutional orders that were triggered, and that's why it pushed the price out of this demand zone, and it's just hovering right above it. I think we'll dip back into demand, and then if there is institutional buy orders still there, we will go ahead and see a pop up. We need to break this channel in order to even think about getting bullish on Bitcoin and crypto overall, so we'll keep our eyes on that. Okay, guys, tried to make this video quicker than the last few I've been doing. If you did like the video, please give me a thumbs up. Also, be sure to subscribe to my channel, guys. I do have content that's coming out. I have a credit spread video I'm very close to releasing that I'm looking forward to bringing to you guys. If you guys have any questions or comments, please leave them down below. As always, I do appreciate you watching. Stay green, guys, trade well, and I'll catch you in the next segment. Take care.